Hello guys, welcome to the Train Parrot. We're going to do a very quick update on Avalanche. We got two potential opportunities coming in for this coin that I don't want you to miss. So let's get straight to it. We are looking at Avalanche on the weekly time frame. You can see that Avalanche didn't get a higher high in December relative to March. So this is one of these coins that, despite being high quality from the fundamentals and the promise that comes with it, on the technicals that is not necessarily being reflected, and not just when it comes to not being able to put higher highs, but also it has put a lower low relative to the lows of August. That is not necessarily saying that we cannot rally with Avalanche. We just need to adjust expectations and assess the risk of, again, not being able to put a new high relative, in this case, to $53, $54. So let's look at this from a closer perspective. We got in the recent price action around February, we were looking for a double bottom. We can see that we managed to put the double bottom. We presented a target towards $25. We managed to get to around 27, but we closed the week right around $25. So we could say that that target was done. Unfortunately, with all the tariffs and all the geopolitical tensions, there's been bleeding. This is not just unique to Avalanche, but across the board, all the coins. Now we need to assess what is the damage, what structure is broken, and whether if we are in a position of advantage thanks to too many people selling in panic, getting liquidated, and all those juicy bits that I really like to take advantage as the market maker I am. So after getting into 25, I would have expected, considering the situation, to stop at around $20. That psychological level that has held the price in August will have been the perfect excuse to say that this is just a deviation, that we are due to go all the way to the top of the range around $50. But instead of that, we couldn't hold the $20. We put a weekly close below that. We defended it very nicely in here. You can see that we went down to $18.32 and we got bought up back above support at around $21. But last week was just too much for Avalanche. It gave up. The good news, if there is such a thing, is that we haven't yet taken the lows of the double bottom. We are below the neckline, which is really not what I want to see. And let's see how things are going with the breakout. The breakout starts from 17th of March. On the weekly, it managed to get to 48, 49, and it retraced to 40. So from the point of view of momentum, we are starting to have a little bit of a deeper than expected correction. Instead of completing the full revenge rally against 57, we are here hovering at 40. Do we have a lower low? No. So that's a good thing. Are we reclaiming the previous low and still in the stage of a liquidity hand that can go still up high? I will say yes, because if this 40 was to get below 38.7, then the whole double bottom from the point of view of the momentum is broken. You can see on the price it is, right? So we are hovering below $20. Price doesn't like going below $20. Momentum doesn't want to go below 38, and I will say that is the last line in the sand. Once momentum confirms what the price is doing, then we got a case strong for a new lower low incoming on Avalanche. So let's just translate 38.67 into price. That is currently located at $16.6, which is still on the price a higher low. So we can fall up until there before really getting into the very, very ugly territory. If we were to go lower, let's say we go to the final support of 15.6, then we have to do all over the work and it's gonna become a lot more difficult. Think about this. Bouncing from here creates a higher low and it still looks healthy for the extended double bottom that we produce in here that was having a target towards $32, right? So we can still do it. But if we go all the way lower to here, then I will cancel out this double bottom and I will say that we need to form now an extended massive double bottom that needs the price really to go into 27 to have the chance to complete it. And that is a lot more effort and might take a lot longer. So let's defend 16.7. In terms of longs versus shorts, you can see that we are already in an area of value. That area of value starts from 44, reaches 36%, but within think that chunk is kind of a replica of the value that we already had in 17th of March, where we were starting to form the double bottom, and that already produced a rally of 75%. We are getting very close to being in a similar situation when it comes to taking out all the longs out of the way, and then you are the spoiled MF that managed to enter at the best prices. Socials are in the low end relative to the recent socials. Well, it's high because it's in the top of the Bollinger Band, but relative to how noisy it can get, Avalanche with a 6% of the total social dominance now being at just 1, that is very small. It can get a lot louder, so we are not necessarily in an area of extreme risk with a combination of little longs and little noise. So let's see how much damage and how much pain Avalanche is currently inflicting to those hardcore fans. I am holding Avalanche, but it's a long-term wallet that I even forgot where it is, which I'm not gonna look until and if we really get very, very high. So far we have taken the biggest degens in here at around $19, $18. We took all the yellow, and there is just left this chunk in here that spans, we could say, until $17. So there is still a little bit of motivation to take them out for as long as the general markets are looking this uncertain. And possibly that is going to help to hit that line of around 40 in the weekly RSI. So I will say, if you're not in a position, if you're looking for a swing long, I will start getting my hands on what's there, browsing the prices right below the price to think what could be a better entry, how to average it down. Of course, you always have to manage the risk in case we're due for a new low. Remember that this low in here, the closing price, the new one is 25% lower than the previous one, so get ready for a potential additional lower low. In case that happens, you have to have in place that risk management. When it comes to the news, we got a combination of one bullish news at 7 out of 10 and then 2-6 sitting in moderately bullish for Avalanche. The first one reads Filecoin teams with Avalanche to offer off-chain data storage for enterprises. Bridges the Filecoin storage network with Avalanche, giving institutional dApp builders a seamless way to park compliance, KYC data off-chain while keeping settlement on-chain. Well, that sounds pretty complex and advanced. The news number 2 is Alchemy Pay adds instant fiat on-ramp for AVAX in 173 countries. Retailers can now buy Avalanche with 50 plus local currencies and cards directly through Alchemy Pay widgets. This brings in cheaper and simpler access, historically correlating with higher spot volumes and incremental demand. BitGet leads Avalanche USD perpetual futures. I've seen lots of news of BitGet listing tons of new assets with 25x leverage. This is kind of a mixed bag because, yeah, more liquidity coming in, but think about who is going to be coming in. There's probably going to be short-term buyers and holders, speculators, high leverage, people getting wrecked are coming in basically. Looking at the liquidation heat map, this is the last one I'm going to cover. You can see that the pain is currently being inflicted and is decreasing as we go lower. So if we are going to use this alpha and we believe that after the head and shoulders, we're just going to do the liquidity hand, grab that liquidity, go back up, then you are right in the spot. Most of the other coins that I'm reviewing are still defending the neckline. So you can see the trend of Avalanche being one step ahead in terms of bearishness from the technicals, right? We have a lower high, lower low, and now breaking the neckline of its own head and shoulders before everybody else is doing is another data point to check. If you want to trade Avalanche, we got a positioned drop of $500. That means that you can really use those funds to trade for free, and whatever profits you manage to make, if we go up from there, you get to keep them. Thanks so much for watching. I'll see you in the next one. Bye bye.